Hey, this is Paul Hamilton. We're still looking at the middle income family that has $40,000 of taxable wages. The one difference from the other videos I've made is I've gone ahead and split up that 40,000 between husband and wife. That doesn't change their taxes at all, really. It's still 2019. The reason why I did that is for one of the credits, which we'll go to here. Child care is that it has to allow both parents, if there are two parents, to be working. So you can't record, say, uh, for one of the spouses, no income. Okay. So I've gone ahead and entered. So I say yes. If you don't have any children, uh, then you don't get this child care credit because you're not paying for child care. If you have one child and say you paid $5,000, there's a cap. And it depends on, again, some formulas, anywhere from 35% down to 15% of your childcare expenses will be um, subsidized. So here we can see it was about $650. So that's a pretty good take. We'll go back just to set things up here. For energy, okay, hold on a minute here. Zero a couple of these out. Okay. So energy efficient property, that is, some of these are pretty similar. Things like a high energy efficient furnace. Okay. So we can see here, $1,000, you get an extra $200 refund. So that's 20%, or excuse me, $300 is a 30% subsidy. Energy efficient improvements are things like storm windows, things like that. And we can see here it only went up by $100. It's a 10%. Energy efficient property costs are things like geothermal, pretty expensive stuff, but 50% subsidized. Pretty nice. The government picks up half the tab. Okay. So we'll just go back to knock all those out. The last major tax credit, so if you have children, you get tax credits. Just on that note, TaxAct already calculates the child tax credit. So when you note it that you had a child under the age of 17, you get $1,000 or potentially $1,000 credit just for having a relatively younger child. And similarly for the earned income credit, which is you can get without any children, but it's much smaller. If you have one or two or more children, the earned income credit is quite significant for modest incomes. All right, so back to education. Okay. So let me get rid of that one for a second. So the big one here is called the American Opportunity Credit. It used to be called the Hope Credit. And it is a credit of up to $2,500, 1,000 of which is refundable. So even if you have very low income, paying no taxes, you can get $1,000 towards your tuition expenses or your child's expenses. Um, here, so they had only, this is a little tricky, so focus on this for a few seconds here. They only had $1,123 of tax before credits. So they could have had up to, they do get 1,000 of the AOC as a refundable credit. They could have got up to $1,500 additionally here for a to fill out the rest of that credit, but they didn't have enough tax to offset. So they kind of lost, a few $100, or didn't lose, but didn't get the full benefit of the credit, you could say. But that's still pretty good, getting a over $4,000 refund for having one child in college, paying no taxes. Okay. So that's the big one. The catch on that is it has to be the 4 years of undergraduate full-time study. So if you're taking classes part-time or graduate school, there's another credit called the Lifetime Learning Credit. And that is a 20% credit. Okay. And let's see here. Oops. Okay. So it looks similar, but the lifetime learning is a non-refundable credit, so they only had $1,123 tax before credits. The best you could do is offset that with instead of being $2,000, be $1,123. So again, if they were making higher incomes, they would have more tax to offset. They could get the full benefit of those credits. And I've deleted out these other ones as I went through, but these are all non-refundable. So if you had child care credit of already of $800, say, that would reduce that further, or you'd be limited to $1,123 total from these, essentially these three categories. All right. There's a couple other places where you can save on educational cost. One of them is if you have student loans that are have interest on them now, you could deduct that amount here. You could also, it's not shown in this calculator, you could also deduct tuition expenses. Not here. Okay. So to do that, again, there's a formula. You can't deduct more than, I think, 2,000 or 4,000 depending on your income, but you could deduct it, make this 18,000 instead of 20,000. That would give you at least a rough idea of how that could be impacted. Almost always, though, it's best to take the credits. A credit is a dollar for dollar reduction in your taxes, where a deduction just reduces your taxable income, which may already be very small, and your taxes very small, or you're in the 10% bracket, or something very low. All right, so that's it for tax credits. There are a few other ones that aren't in here that you could, on that note, there's an adoption tax credit. I think it's close to about $15,000, and you can actually use that over, I think, 5 years. So if you don't have enough taxes to offset, and there's a few other ones that are a little more obscure, but these are the big three right here: having children, having a green energy home, and going to college.